Going live. Share my screen with the audience. No, I'm not going to do that. I think I'm live. Good morning, everyone. For the first Thursday of November, we're doing it a little bit differently this morning because I wanted to talk. The purpose of these calls, as everybody knows, and the reason we set up First Thursdays to begin with, was to communicate more effectively to all shareholders. And this live recording will be made available on our website. So you can go to qumedia.com into the investor area and it'll be published there after we're done. And Jace is sitting over here this way, sitting over here to my right, spelled backwards, sitting over here as well, but he is anxious to be on camera because, as you all know, he loves to be on camera. But I said, no, let's just start with me, and I'll talk to you guys directly. The reason we're live is because I wanted to be as current as we possibly could be in terms of what's happening with the business. There's these are normally pre-taped, and we take questions and know what those are in advance so that we can answer those as effectively as possible. So for those of you who've been watching this along the way since we started doing the first Thursdays, we normally pre-tape them. We're not doing that this morning because, frankly, I wasn't sure with all the activity of what's happening in the company right now, whether or not there would be things that might be getting announced as soon as now. And the bad news, Scott Patterson, our chairman, always loves the concept of bad news first. The bad news is that we're not quite there yet. The good news is we're getting there, and we're getting there really, really quickly. And so what is it? And what I really wanted to do this morning is, as again, transparently and effectively as possible, describe high level kind of what's happening and what's been happening for quite some time now. And you know, I'm not trying to be overly coy or mysterious. It's just that material disclosure really is defined by, I mean, at a high level, it would be as if we had a signed contract for something right now, and it was an important and material contract to our business, and I was not disclosing that. That would be lack of disclosure of something that's material. Talking about what, you know, we're trying to do as a business and a business operation and what we're attempting to accomplish as a business, that's what we do every day. That's what we're here doing. It's not news that we don't put a press release out that, you know, we're trying to make the company more profitable. It's not news that we're trying to do things that can improve the share price of the company. That is the job. And so what I'm really going to be talking about today is more on that level, and try to give a bit of insight into what's driving the process that we're going through right now and the things that we expect to be announcing absolutely before the end of the year, but hopefully before the end of the month of November. And you know, I'm a serial entrepreneur, which the other definition of that is eternal optimist, because you have to be if you're an entrepreneur. But the fact is that we are getting closer and closer every day. It's part of the reason I'm doing this live. I literally just got off the phone with some strategic advisors in Raj Mishra in India seconds before I sat down in front of the camera right here. And so every morning and every evening right now, there are discussions that are taking place with our Indian team, with our Canadian council, with other things around all of the different strategic moves. So what are they? What are we doing? I was speaking to one of our largest shareholders recently, and I kind of half jokingly said, we're going to focus on the businesses that are profitable and growing strongly, and throttle or get out of even potentially businesses that are not growing, that are burning cash, and that are not returning shareholder value. And one of the questions that came in through Discord was, are there business units that we're focused on and that we're driving more attention to? And the answer to that is yes. And those two business units really are the influencer marketing agency business units inside the company. Both of those business units are profitable. Both of those businesses have a long list of blue chip clients. There were also some questions that came into the Discord about the writer's strike here in the US, and it definitely had a negative effect on us in Q3 and Q4 of 2023. We've definitely rebounded from that strongly in Q3 and Q4 of 2024, and we expect that trend to continue. But it's not just the writer's strike. It's that we've also increased our client base here in the US across other verticals beyond just the movie vertical. So gaming has become something that's been very, very important to us. And we've increased the client list and the size and scale of the kinds of work that we're doing now in the gaming space. In addition to that, we've gotten into some other arenas. We're doing our first consumer products campaign right now. I can't say who it's for, but it's a major brand that all of you would probably be familiar with, that we're working on a campaign that we hope leads to a lot more business in that area for us in 2025 and going forward. We've gotten into the beauty space and done a number of big launches there, including with a beauty brand that's owned by Procter & Gamble. So the bottom line is that the US business is growing strongly. The budgets are growing, and we're winning a lot of awards, and we're getting stronger and stronger with each passing day, week, month, and quarter. Same thing is happening with Chatterbox in India. Chatterbox continues to grow. It continues to deliver strong results. It's a slightly different business model than what we have here, in that we represent influencers through what we call Chatter Represent in India. And by the way, I see a note that says going live shortly. I assume that means that we're already live.
I typed that.
Okay. So at any rate, Chatterbox is also growing strongly, has a blue chip client list that includes, major brands like Spotify and HP and others that we do award-winning work for there. And so what we've been doing is we're doing a lot of work on how we can more significantly grow our influencer marketing business, both here in the US and in India. That's led to significant interest from investors, particularly in India. As many of you may or may not be aware, there is a very, very hot public market that exists right now and has been going for a while in India. India is a booming economy. If you Google it and read about it, you'll read about how India is poised to be the world's third largest economy here over the next decade or two. It's growing both in terms of its global power economically, as well as the internal power. And all of that is showing up and manifesting itself in the public markets in India right now. So if after this call you Google about the explosion of stocks in India, et cetera, you'll see a lot about that. What that's also leading to is just more investment capital being available in India and driving the business there. And so, look, my first time that I went to India was all the way back in 2016. We launched our English language channel in 2019, and we switched to our Hindi channel in 2020. So we've been in India for a while now, and we've always been big believers in the potential power that would come to us by having a strong presence in India. That has been supported and augmented in a huge way by the addition of Raj Mishra on our team. As many of you are aware, Raj Mishra was the country manager of a small app, or small, very fast growing app back then, called Musical.ly. Musical.ly was acquired by ByteDance. Most of you are probably familiar with ByteDance as the owners of TikTok. And Raj became the country manager of TikTok India when they acquired Musical.ly. What we now call TikTok here in the U.S. is Musical.ly. And now with the recent elections here in the U.S., my guess is that TikTok is not going to go away in the United States. So the bottom line is that we have leadership from Raj that's very strong as well in the so-called, what everybody refers to now as the creator economy. We have 30 to 40% growth in our businesses, both in Chatterbox and the US. We have a blue chip client list. We have great interest from strategic investors across the board. And so we found ourselves really in an enviable position in terms of what we believe we can do to grow those two businesses. And so we have made, there were some questions about pivots, et cetera. We have made a pivot to increase our attention on those businesses because that's where we see growth, profitability, and investor interest. Well, guess what? That's kind of the trifecta of things that we see that can drive shareholder value back to all of us as shareholders of the company, and also have a business that's growing not just on its own, but alongside the immense growth that's happening. I've spoken previously about Goldman Sachs and their reports that they've put out of it's a $500 billion business by 2027 on a global basis. And what's happening increasingly, both for Chatterbox and for QU USA, is that we're getting more and more engaged in international campaigns across the board. So there's a lot of effort that's taking place there. It's being met with great interest by investors on both sides of the world, but particularly in India. And you can presuppose and imagine that we're talking to strategic investors at the private level, at the public level, at every level imaginable in terms of the growth trajectory that we're on in the business unit that we're there, led by not only the crack team that we have here in the US, but by Raj Mishra and the great team that we have at Chatterbox in India. So much of what you're going to be hearing about between now and the end of the year, much of what you're going to be seeing happen for us as a business is going to be driven by and revolve around the two business units that we have that are providing the greatest level of growth and profit in the company right now. What does that mean for the other two business units, our channel business and our gaming business? What that means is on the channel business, we are looking at that very, very carefully. We're in discussions with a number of different partners, and we're looking to see how we can best monetize that business going forward, which could include divesting some or part or some of that asset in some way, shape, or form, or finding partnerships that can come in alongside us and fuel part of what we can do in terms of investing into that business. We don't believe that it's been providing the kind of shareholder uplift that we've gotten from it in the past. And this is really following in line with a lot of what if any of you follow in the media space, whether it's Disney or Comcast or Paramount or Viacom, any of these companies, you'll see that there's a lot of activity that's happening both here in the US and Europe, around the world, and India around this, and we're following suit. We want to make sure that we're not investing dollars and spending too much capital in a business that's not giving us a return for that investment and not providing the shareholder uplift that we think that we can get out of profitable and fast-growing businesses like Chatterbox and QU USA. With gaming was growing extraordinarily quickly, as most of you are aware, but the problem with the gaming business is that it requires significant capital as well. And because of the market price, our share price, where the markets are in general, we've throttled that back, as I've said previously. And we're still big believers in the gaming business, but we're also seeking third parties who might want to come alongside us and help us drive that business forward. So if you look at our business as being made up of 4 business units, the 2 influencer marketing groups, the channels business, and the gaming business, we've decelerated our investment into the channel and gaming businesses, looking for other partners that can come in and either have some form of additional investment or divestment of those assets going forward. And we focused our efforts with strategic investors, including anything that could happen around public markets or whatever might be possible for those businesses going forward. And we expect that you're going to be seeing announcements coming from us with respect to all of the above. Certainly between now and the end of the year, and in a most perfect world, between now and the end of November. As I'm sure you can imagine, there is a lot of complication with all of these things. You're dealing with share prices, shareholders, all sorts of factors that are involved in this. But what you can also imagine is that we're working on this tirelessly day and night. We have been for months now. This is what I've alluded to in some of the previous calls and discussions that we've had. And the truth be told is that I said this just to somebody yesterday. The whole team, everybody, I think, are more excited right now in November of 2024 than a lot of us have been for a long time. And it's hard to see that when we look at the share price, when we look at the market cap, when we look at the overall situation in the business. But, you know, as our future US president said, I think it was about health care, I have a plan. He just didn't tell exactly what that plan was. So let's hope he actually has one. We do have a plan, and we're executing against that plan. There's progress being made on a daily basis, and all shareholders are going to be hearing more specific and direct information about that plan in the coming weeks and months. Our target right now is to make a number of these things happen and be announceable to the public markets, as I said, before the end of 2024. And we're teeing things up right now to be positioned and set up for the totality of 2025 and going forward from there with what we think will be a much stronger business, a more profitable business, a more heavily supported business from the global investment communities, and one that we think will not just be a breath of fresh air, but be wind in our sails going forward. I saw a comment from a shareholder not that long ago where I think they were saying something like, you know, is this a scam? It was QU Media scam. No, it's not a scam. It's never been a scam. It's not gone exactly the way we wanted. We certainly all know that, and we appreciate the shareholders that have stuck with us. But I will remind people that the last time that we were at 3 cents was right before we saw our stock climb up to 50 cents. So we have seen it happen, not that long ago, 3.5 years ago. So we know it's possible. And as impossible as it might seem some days for all of us, and as unhappy as we all are, starting with myself, about where we are as a company and evaluation right now, we expect that to turn around. We expect that to turn around in a way that it did 4 years ago. And we're doing a lot of work behind the scenes right now to make that happen for all of us. So with that, I'm not sure if there are questions that have come in. If there are, I don't see any questions in the chat. So I want to say thank you to all of you that have supported us. We'll be putting this up on the website, as I said. Keep your questions coming into Discord. And I will say with a high level of confidence that the first Thursday of December is going to be one where we'll be talking specifically about the events that have happened between today and that first Thursday, which is, what day is that, Jace? Do we know? First Thursday of December?
Right now. Let's see. That is first Thursday will be December 5th.
So December 5th, we may go live again. Maybe I'll bring Raj into that call. We'll make that decision between now and then, but I expect to be sharing a lot of positive and exciting news with all of you when we do that. So thanks so much for attending this morning, and look forward to sharing this news with you in the coming weeks and months. Thanks so much. Bye-bye.